right, I'm gonna try to make this one pretty quick. Just got back from the gym, hit a vicious chest day, and also just ordered some food. Peter, this video is almost exclusively for you. This is not a back testing video, but this is gonna be probably the most in-depth video I've done on my strategy. I could show receipts, but to be honest, I'm just feeling lazy right now. If you think I'm a fraud or if you think I'm not actually making money trading, just look through my channel. I've posted receipts of me getting paid out $8,000 over the course of about a month and a half. And I only started trading basically in March of this year. So I've been trading for about 3-4 months, and again, not to be arrogant, I'm kind of just prefacing why should you even watch my video. I'm in the top 1% of funded traders, to put it simply. I was on 3 XFAs, or I should say I'm on 3 XFAs right now. We are going to be scaling up to 5 XFAs next month. I think I can still get a $10,000 total payout for the rest of this month. Next month, I'm very confident I will make $20,000 trading, and I'm about to show you how I intend on doing that. So before we even get into anything, one of the things I want to encourage you guys to do is kind of try to have logic behind why you are entering trades. One of the things, again, I've only been trading for 3-4 months, but I can't wait to say I've been trading for like 6-7 months. I'll put a fire edit when that, even if it's not a meme anymore, imagine 6-7, that'd be so tough. Anyways, try to have logic behind your entries. One of the things that I really struggled with when I was new and caused me to blow a lot of accounts was I was just trading based on pattern recognition. I would see an inverse fair value gap and a draw on liquidity, and I'd be like, all right, boom, we're going to enter. And then I would blow dozens of accounts. I probably realistically have blown 10 to 15 accounts. A couple of those being actual XFAs that I could have gotten paid out on, which is brutal. But what I'm going to walk you through throughout this video, yes, I'm going to walk you through the mechanics of my strategy, but I also want to walk you through the psychology. And to be honest, my channel does not have as many videos going in depth on the concepts I'm going to be talking about in this video as I'd like to. So I will be linking below some videos if you don't understand things like an SMT, a draw on liquidity, market structure shift, CISD. If you don't understand any of these things I'm about to talk about, I'm going to link some really great videos for you that I personally have learned from. Last thing before we dive in, I don't have anything to sell you. I don't have a course, don't even have a Discord. But let's get started. So had to restart the recording because I hated the way I explained this. But basically what my strategy revolves around is AMD, which is accumulation, manipulation, and distribution. Hopefully I spelled this right. Now, there's a lot of ways to approach AMD. This is a pretty common thing that's talked about in trading. But basically, this is what my strategy looks like, right? Let's say that this is Asia session, right? We're accumulating, right? We're just moving horizontally. And then let's say we have some, let me try this one more time. So let's say that we are generally accumulating. Maybe we have like a move down, move up, but then we just kind of start accumulating here. Now, let's say, again, this is Asia session, right? I'll mark this out like this. This is Asia session. So what I want to see coming into New York Open is us taking these highs, manipulating before we continue lower, right? This is New York session. This is basically the entry that I take every single day. And I have found that this model presents itself at least twice a day with, it's a very high probability setup, and it presents itself at least twice a day. So let's talk about this really quickly. So whenever price is moving horizontally, this is not where you want to be entering your trades. This is where price action just looks choppy, right? So what does accumulation look like? Here we go. That's what I'm looking for. So for example, what on God's green earth am I looking at? This is why I don't use TradingView anymore. I just don't get it. So this would be an example of accumulation right here. Right, where it's just this horizontal price action. Dude, TradingView drives me fucking nuts. But this would be an example here of accumulation, where it's just kind of this horizontal movement, not really too much happening. And then this would be an example of distribution, right? Now, this is just random. I don't know what actually happened right there for price, but this is basically what the model looks like. I'm going to dive in. I'm going to go in depth on this for you guys. So what does my model actually look like bit by bit as far as my strategy goes? First is a liquidity sweep plus an SMT. I'm going to explain all of this with a reasonable degree of depth. But we have a liquidity sweep and an SMT. This is my cue that the market is manipulating price. Then I want to see either a market structure shift, break of structure, change in the state, etc. And then I enter on an inverse fair value gap, and I'm targeting liquidity, right? I think there's 2 T's in targeting, but maybe not. No, 1 T looks better. This is the model, guys. Super duper simple, but I don't ever deviate from this strategy. This is a high probability setup where it works with a reasonable degree of efficiency, and you can also target pretty decent RR. I have a video of me catching a double-digit RR movement. It was a 1 to 10, I believe, and if I would have stayed in the trade, it would have been a 1 to 20. And that was actually the biggest day of my most recent payout. But this is basically what it looks like. Now, I think I already mentioned that I'm going to link some videos for these subjects. They're not going to be on my channel, of course. But again, what does this look like? So it would be like my short setup, for example. We would accumulate overnight, or let's say, for example, we even have like an actual move overnight. Let's say Asia session has a big move up overnight, and then we accumulate a little bit pre-market, right? We're accumulating moving horizontally. How do I know that price is actually manipulating? How do I know that price isn't taking these highs to then go higher? How do I know that price is going to want to take these highs, then go lower? SMT. Right? This is how I know with a reasonable degree of certainty that price wants to manipulate. Now, what is an SMT? Oh, whoops, I meant to control copy that. Right, so let's say, for example, how can I move this whole structure? Is that possible? I don't know. Hold on, let me try this. Where can I paste you at? God, this is so annoying. Okay, let me just do it this way, right? So let's say this is NASDAQ, right? And let's say that this is market open right here. Let's go vertical line. And this is market open. If NASDAQ on market open takes out these highs, and I'm looking at ES, and ES doesn't take out these highs, that's an SMT. Because NASDAQ and ES, for all intents and purposes, move identically. There should be no discrepancies, theoretically, not even theoretically, but just rarely is there discrepancies in price between correlated assets. So that, for me, is always going to be the biggest signal that price is going to want to reverse. Now, I don't enter purely off of this SMT right here, right? That would be silly. I don't enter purely off of this SMT. What I would do is I would drop down into a lower time frame, and I'm looking to see some sort of, again, market structure shift, break of structure, change in the state, etc. So if I saw this SMT get put in, I'd want to see a strong candle close underneath a previous relevant low. Or I'd want, something of that nature, right? I don't know if you guys are using market structure shift, break of structure, change in the state. I generally use change in the state more than anything just because it helps me get a little bit earlier entries, higher RR, also probably lowers my win rate a little bit, but I prefer change in the state. And then I want to see us inverse some sort of fair value gap. Now, I guess one thing I did not talk about is this would actually be, I guess, a bonus because I don't use it every single time, but bonus would be higher time frame fair value gap or any other PD array for that matter. So if this SMT occurred inside of a higher time frame fair value gap, this is creme de la creme. I'm risking a lot on that trade. I'm just kidding. I'm risking the same amount every time. But the reason that I like entering, especially if it's inside of a higher time frame PD array, I'd want to see it be somewhere. Like, let's say, for example, this is the short model. I'd want to see it be somewhere that we've rejected before. Like, if we look here, every time that we've touched this would be let's let's say this is a SIBI. I don't even have it saved on. I don't use TradingView, by the way. I use a different broker or a different charting platform. But let's say this is a BISI, right? Let's say it's a 15-minute BISI. And we have consistently had a bearish reaction to this BISI. And then on top of that, price moves. Let's say it's like this, right? Let's say price moves higher into this BISI, right? Let's say, again, touching consequent encroachment, which is the middle of the fair value gap. I want to see us continue lower. So then what I'm looking at, once we get the liquidity sweep, right? Because again, that would mean that, we took out these highs. NASDAQ swept these highs up here if we're trading this on ES. We have a change in the state, break of structure, market structure, SIF, etc. And then we also are inverse, let's say like a 3-minute fair value gap down here on top of getting a market structure shift. That's telling me that price wants to go lower. That's the story that I'm getting, right? So let's say, for example, we don't reject this fair value gap. Let's say that we actually have a bullish reaction to this fair value gap. And we go back to the 15-minute BISI. What might that tell me? Well, that might tell me that price wants to go higher, right? Yes, we did put in the SMT. Yes, we did maybe, have a market structure shift to the downside. But, it's just if these things don't come together, that's price telling me maybe I want to go higher. And then we could invalidate this SMT. That's another thing I like about this model is I'm only ever wrong, right? When I enter a position, I'm only ever wrong if the SMT gets invalidated. That's the only time I'm wrong with my model is if the SMT gets invalidated. So it gives me a really easy play. It makes it easy for me to enter trades because I know where my stop loss is going. And there's no questions of, do I got to move my stop loss to blah, blah, blah. Because I'm only ever wrong if the SMT is invalidated. Because why would the market want to manipulate price to the upside here? Because we need to fill institutional sell orders to push price lower. Price can't just move on its own, right? And let me tell you also, institutional finance is who's moving the market. It's not you and me. If you want to have your mind blown, do some research into how much money is moved through the NASDAQ and the S&P. The NASDAQ alone, if I'm not mistaken, cycles through anywhere from 50 to $150 trillion with a T. That's 150,000 billions of dollars on a yearly basis. Break that down day by day. They don't care about hunting your stop loss. So I want to be trading with the institution. So think about it, right? Let's also use let's say this is our range. Let's say this is, the range that we're working with here. If I was an institutional buyer or seller and I wanted to sell my position, would I want to sell it when the price is low or when the price is high? I'd want to sell it when the price is high. So what might institutional traders do before they sell off their positions? They might inflate price to a premium price, then sell their positions. So it's, again, you might think I sound crazy or whatever, but this model has worked for me and it helped. Again, another thing I've heard is we have no idea why the market moves. But if you can create some sort of narrative in your head, I definitely spelled PD-array wrong, by the way. Why didn't you guys tell me that? PD-array? Guys, what are we talking about? PD-array. If you can create some sort of narrative in your head that helps you logically move throughout the markets, it's going to really help you guys out a ton. So when I see that we had a move up overnight, we accumulated pre-market, we manipulate the highs inside of a higher time frame PD array, then we displace lower, creating a market structure shift, change the state, whatever you want to call it. We also inverse a fair value gap. Let's say we inverse a fair value gap and then we retrace back to the gap, right? Let's say boom. Can I just move that? Whatever. But you get the gist, right? This just tells me price wants to go lower. It's as simple as that. It's as simple as that. And it might not sound simple right away, but it sounds simple to me just because I understand my model. And it's the exact same thing if I'm doing a buy order, right? If I'm looking at my buy model, it's the exact same, right? So going into the day, I want to see what price has been doing. If price just accumulated overnight, I might look at the weekly range. I might see, are we in a premium or a discount for the weekly range? or I might just wait for my buy model or sell model to present itself, right? But let's use that example. Let's say that we just accumulated overnight, right? And then market open, we dump lower, right? We might accumulate a little bit more at this low, but then let's say this is where we put in an SMT, right? I will oftentimes use lower time frame SMTs as well, but the lowest L usually goes about 5 minutes. I want to see a SMT take place. I want it to be a major draw on liquidity, right? So like if I zoom out, I need to be like, I want to be able to see the highs or the lows that are getting manipulated if I'm standing across the room, right? I'm not looking to see if, oh, did we manipulate this 15-second high, right? Theoretically, it would work because price is fractal. But again, let's say that there's a fair value gap down here, right, that we manipulate the lows inside of. And then we also created a fair value gap here, right? I want to see us displace lower, right? And then, where's my tool, right? We have a change in the state to the upside, right? We break through this fair value gap, retrace, and then I would enter long at consequent encroachment, targeting the whatever liquidity is resting above, and then my stops are at the SMT that created the low. And this, again, it's so simple for me because no matter what happens overnight, no matter if we're bearish, if we're bullish, this is all it is, guys. I'm looking for a liquidity sweep and an SMT, some sort of change of structure that shows that price wants to move towards an existing draw on liquidity. We inverse a fair value gap. I'm able to target liquidity. And the cherry on top is if we're doing all of this inside of a higher time frame PD array. Again, I'm going to put some videos in the description if you don't understand basic concepts, which that's not a diss, by the way, but if you genuinely don't understand like a market structure shift, an SMT, liquidity sweep, I'm gonna put probably a playlist in the description of videos I think are actually good for you to watch. If you have any questions, let me know down in the comments below. Another heads up is I might not be trading for the next week or so as we approach all-time highs. It's just so hard to look for a buy model when there's no draws on liquidity to the upside. So I'll keep you posted if I do start taking trades. I'd love to have a 20K month next month coming off of a 10K month. That'd be super sick. But anyways, trade safe, ladies and gentlemen. I'll see you in the next video.